Hey, let's have a quick talk. Have you noticed that the capital raising game has completely changed over the past couple of years? Are you a syndicator, a fund manager, a capital raiser that's struggling to attract investors beyond friends and family, and it's just become so difficult to raise enough money for your deals? Are you losing out on incredible real estate deals that are now showing up in the market because you're not confident that you can raise enough money from your investors to take down those deals? Or worse yet, are you even considering having to throw in the towel on your real estate business and go back to your W-2 because you're struggling to get those deals done due to lack of capital? This is why I created LinkedIn Capital Raising Secrets. It's a course where I teach you my proven 4-step system to turn strangers on LinkedIn to investors in your real estate deals. We teach you how to hack the LinkedIn algorithm so your target investors see your content, learn from you, like you, trust you, and invest with you. And that is just the beginning of what you'll learn. LinkedIn has over 1 billion users who are looking to grow their wealth, and you have a fantastic opportunity to tap into high net worth individuals to invest in your real estate deals. So in this 8-week on-demand course, we teach you how to find qualified leads and turn them into investors in your deals without feeling like a pushy used car salesman. Oof. So how do you sign up? Go to capitalraisengsecrets.com now and click apply. Fill out our application and see if you're a good fit for the course. We want to make sure that we can help you. And our course will show you how to raise millions and millions of dollars of capital from complete strangers compliantly on LinkedIn, just like I've done, so you don't have to worry about falling short on a raise again. Visit capitalraisengsecrets.com and click apply now to get more information. Raising capital for real estate investors. Oh my goodness, I'm so excited to welcome you to a coaching episode today. These are my favorite. I mean, it's fun to talk on my own, but goodness gracious, is it fun to have great people here. So for those who don't know me, my name is Amy Silvis. I'm the founder and CEO of Silvis Capital. And gosh, we've got apartment complexes and flex industrial all throughout the Southeast and the Midwest. But this isn't about me on this episode. This is about our guest, Hayden Duer. I said that right. Did I get it right?
Absolutely.
Okay, cool. I'm a little overly caffeinated, so I just want to make sure. But friend, welcome. We're so excited to have you here, to have folks get to know you. And then of course, talk through kind of what's going on with your capital raising business. For those who don't know you, can you tell us just a little bit about you?
Yeah, absolutely. Thanks for having me on. So I started in real estate back in 2017, and I have a family portfolio that I manage today and grew up around real estate. And right after college, I talked to my dad and I said, "Hey, how do I want to get into real estate, and how do I do that?" He said, "Start from the ground up." So started in maintenance and worked my way up to become a property manager. And I managed apartment buildings down in San Diego, California, of 150 to 250 units.
Okay.
And so that's where I got my jump into real estate. And then when my daughter was born, I said, "This is a good time as any to quit and start buying my own apartments." So that's where we're at today. So that was about, she's 3 now, and I got started buying my own apartments 2 years ago. And so that's where we're at today.
Incredible. Oh my gosh. And you have a daughter. Do you mind sharing what her name is?
Her name's Eleanor.
Eleanor. Oh, how adorable. So do you all buy in San Diego, or where do you all typically buy?
We buy outside of San Diego, or outside of
Okay.
California. My family portfolio is in California, but it also is in Arizona and Texas. So I have, managing that, I understood the systems that you need to put in place to manage outside of California. And given the opportunity, definitely personally don't want to invest in California. So investing in some of these other states. So we invest in Arizona, Kansas City, Missouri, and Kansas, as well as Texas. So
Brilliant. As your neighbor to the north up here in Los Angeles, I hear you on not wanting to buy in California, but hey, to each their own. I love your dad's strategy of really, helping you learn from the ground up and maintenance and property management, and how you're able to do your own thing and you can build off of those lived experiences. Wow, hats off to your folks. That's really, really the smart way to raise a kid. Well, cool. Let's dive into your business and capital raising. I'm going to orient folks real quick because, as I've said several times in this podcast, I'm self-taught with capital raising. I wish I had kind of a guide or goalpost to figure out, here's where you need to go next. So let's just orient folks real quick. And Hayden, you can tell us where you find yourself on this. I'm sharing my screen. So there are four phases of capital raisers. We find the fear zone is phase one, where you've had little, if any, success raising capital, and you've kind of got this imposter syndrome. That's really the fear zone. And you don't really have a lot of deal flow, no systems in place. You're excited though, but maybe a little fearful. Pipeline purgatory is where you've raised a couple of times, probably from friends and family, but now you find them tapped out and you're traveling all over to conferences, but that's not getting you investors. Maybe you've got some systems like a CRM in place, but your pipeline of investors is still a bit unpredictable. Your deal flow might be a little bit patchy as well. Phase three is the bottleneck break point where your capital raising is consistent and your confidence is growing, but the amount of capital that you've raised has really leveled off and you want to get to the next level. You've got good deal flow, but you're still not quite in phase four, which is the confidence zone where capital raising feels predictable. Each raise grows in size. You've got reliable deal flow. Your systems are professionalized with automation for your investors. And essentially, your capital raising supports your lifestyle and it feels easy, scalable, and fun. So, friend, where do you find yourself in these four phases with capital raising?
Or I number 2, phase 2, the pipeline purgatory is where I see myself. We've raised over the last year and a half, we've raised $1.4 million from the friends and family,
Okay.
and we've had a little bit of help from friends help us raise a little bit of capital. So we basically were scratching and clawing to get those first couple of deals. We have 2 deals currently under management, 44 doors on the multifamily side. So
Wait,
that's where we're at today,
great.
and we know that we're understanding that where we're at in terms of units wise is behind our knowledge and our expertise.
Ah,
So we're getting to that point where we're like, all right, we know we can get there now, and we have the confidence to execute on larger deals on, several hundred, if not several thousand doors down the line. It's just the ability to execute is, and which is why I'm excited to jump in. So
perfect. No, I love that you have that awareness though, truly, because what I often see with people is they can't see the next step or two that's in front of them, right? So they're really excited that they've raised capital, they've got a few deals under their belts, but they don't have a coach or someone who's been there, before them to say, "Hey, let me tell you what's coming next." Usually by your third or fourth deal, you may not realize your friends and family are tapped out and all of a sudden you're terrified that you won't be able to bring the deal across the finish line because you haven't figured out how to get strangers to invest in your deal. So I love
mhm.
you have this awareness ahead of time and you're curious about, yeah, what to do next. We'll talk about, what your questions are, but I just really want to commend you. You're so far ahead of most people in that space. So hats off to you because that's a huge pitfall that you're going to completely avoid because you know what's going on.
Thank you. Thank you. Yeah, a lot of studying and thinking and processing. So it's
Yeah.
taken some here.
I clearly you're a thinker and a planner, which is it serves you incredibly well in this industry. So let's dive into it. What questions do you have on your mind that we can help you with in your business?
Yeah. So my partner and I, we've had a lot of discussions, and we were actually discussing before this call. Just really, just I guess first question, just that initial confidence, I guess, or where exactly to find these types of investors. I know I've had a lot of people tell me, go to conferences. To your point that you made on the pipeline purgatory, go to conferences,
Yeah.
meet these people. LinkedIn's a great spot, and met a lot of great people on LinkedIn. It's the it's just getting over that hump of okay, now we don't necessarily have a deal where our pipeline's growing and we should be getting into a deal here very soon. It's the confidence to be able to say, okay, here's a $4 million raise, $10 million raise. Here we go. And it's the cart before the horse, as everyone says. But I guess my question is to clear that up is getting into that next level. What is your advice to start saying, okay, I can raise that $4 to $10 million range and so on and so forth?
Yeah, I love this. This is a very important question and timely for you all and a lot of people listening too. So, the question of where to source strangers is a powerful one. And I see it in my experience and the students I've taught. We really have we've got one of two choices. And the first one is have a bunch of one on one meetings, right? And that might be as we talked about, at a conference, and it doesn't mean you can't go to conferences, but I see people often defaulting to going to conferences where other real estate people are who are also trying to raise capital. So everyone's raising from each other when everyone wants capital. So
Yes.
probably not the best idea to fish where fish aren't. So you can fish where other people are, where the fish are, as it were, for like wealth management conferences or things like that. But unless you have the ability to stand on stage and give a talk, you're likely going to have a bunch of one on one conversations with people you're not totally sure who they are. I mean, if they're at the conference, you might have a general idea, but are they trying to grow their wealth? Do they already have wealth? Are they trying to, preserve that capital? You can figure it out, but it is wildly inefficient. And you can spend quite a bit of time and money going to those conferences. Again, it doesn't mean that it's not a strategy that can't work, but I'm all about efficiency and effectiveness, especially for
Mhm.
my students. So I like to think of one on one conversations as something that happens after we talk to people at a one to many scale. So I've found that social media, and it's no secret I talk about LinkedIn, but I truly think social media is the most cost effective and efficient way to find people to invest in deals because it is one to many. It is you speaking to ideally tens of thousands or hundreds of thousands of people on a weekly basis that hear your message. So that can be intimidating. We can go through a little bit more about social media or how to pick or what to say or which platform and all of that. But and I think you can do maybe some people do some dinners or things like that in their local area. But again, how do you source those people? How do you pre qualify them? What I like about social media is we can almost pre qualify other people before we take the time to speak to them one on one. And that leads to ultimately serving our potential investors better and being a better use of our time. So I'm going to stop right there and check in and see is this resonating with you, this kind of framework, or talk to me?
Yeah, absolutely, and I guess as you were talking, I was like, "Man, I should back up just a hair."
Okay. Yeah.
We talk a lot about our whys and our reasoning for, getting into the business. We got into the business because we wanted to help young professionals. I've got an advantage with my dad who taught me growing up how to invest in real estate. I see a great need for it. I see a great opportunity in real estate, and I wanna help my friends, my family, and people, young professionals
Mm,
jump into real estate
yeah.
jump into real estate and give them those opportunities who don't necessarily have the time early on in their career because 'cause they're building up on their W-2s or their
Yeah.
1099 job. So
Yeah.
giving those opportunities, that's why we got started with these opportunities. So
Right.
transitioning into, we do want to scale and we have ideas, but we wanna build our community so that we can one question I had was, does it make sense to build scale from accredited investors all the while operating and trying to build the young professional pipeline or the Y pipeline where we
Yeah.
can do smaller deals and have those opportunities as well as the larger institutional type opportunities?
I love that. So what this says to me is you're talking about your target avatar, which is
Yes.
so important to understand. And this is one of the, I think, like the second week in my course, we talk about target avatar. And what I tell my students is the people that you want to serve may not necessarily be the people that are capable of being served.
Yeah.
It's like I think of one gentleman, I'm not going to say his name, but he used to work in government and he thought, oh, I'm going to pick people that also work in government as my target avatar. And I had some reservations, but I was going to let him run with it a little bit. And it was really hard for him to get traction. And a couple weeks in, this is what I used to teach the course live. I was like, hey, how's it going? And he was struggling. And we had a pretty serious conversation about who wants to invest? Government workers tend to be really risk averse. I'm not trying to say something that's wrong, but they've got often great pensions. Their mindset might not be the lowest hanging fruit. It doesn't mean that we shouldn't serve them or they can't be people that we don't want to educate and serve, but maybe when we're trying to get things off the ground and we're trying to grow, maybe they're not the lowest hanging fruit. I'm 44, so I'm obviously not a younger audience. I'm obviously older than you. So I'm going to turn the question back to you. What research have you done or what's kind of your vision around all the investable capital in the United States? How much does like Gen Z or younger millennials have versus elder millennials, Gen X, and baby boomers?
Yeah, yeah, we've tried to make young professional a very broad broad
Okay.
term.
Okay.
Just the more we've done, but I hear what you're saying, and that's what we're running into, right? And while they might want to invest, they might not be able to, or they might not be able to invest the minimum, which is fine. But for us, we need to, we want to keep the business rolling and move forward. So I definitely understand what your that point of, not only they might have the money, but they also have other big life opportunities in front of them, getting married, having kids, or, you know,
Student
uh,
loans.
student loans, exactly, things like that. Yes.
Yeah.
So their capital is put in other places for this time being. So we found that out, but we want to also make that potentially more palatable as well with investing,
Yeah.
putting that aside if possible. But we've thrown those ideas out and back and forth, and we're realizing as we're wanting to scale, might not be with the pipeline that we currently have or the pipeline of investors we currently have, we won't be able to scale at the level that we want to. But that's why I was curious about if it makes sense to whether it's two arms of a business where we are working on 100 to 300 plus units in
Mhm.
one section, and then we have
Yeah.
a section of a business that we operate in the 20 to 100 unit range. That's a long-term thought, but
Yes.
as we go, that's kind of where, we got to get there first. So we
Yeah.
got to get to the point where capitalizing on those. So
I love it. I think it's a fantastic goal. And to your point, we're seeing that again, young professional. Maybe I should have backed up and asked you kind of how you define that. But if I'm thinking Gen Z and younger millennial, these folks are the least likely to use financial advisors. They're the most likely to self educate and really consider alternative assets. I'm probably not telling you anything that you don't know. So when these folks inherit money, if they do, and if and when the money comes to them, setting yourself and your company up as the choice for these people could be phenomenal. Now, is that
Mhm.
right now? Not yet, but could
Right.
that be a longer term, as you said? I follow Myron Golden. Do you know who he is?
I
It's
do
cool.
not.
Okay. Great guy, talks about sales. But what's really interesting about him, if you follow him on YouTube, he has, consulting classes, all sorts of things that you can pay. He considers his YouTube channel kind of his charity work, not in a pejorative way, but truly, he has a heart to give back. He wants to
Mhm.
serve people that may not necessarily be served where his current business is, where his courses, consulting masterminds aren't within the kind of affordability range for everybody, but he still thinks his message and his information is valuable. So, anyway, as you talk through this, I'm just thinking, exactly to your point, is this not one or the other? Is this, and perhaps you're doing some work on building and educating the younger professionals. Maybe they don't have the money right now, but because you do need to grow your business in order to serve those people in the future, maybe you're doing some things on the side. But I would recommend building up your business and your people who can invest now to keep your business
Yeah.
afloat. It's really tough to focus on two things at once if you haven't mastered one first. So get one up and running, and then we can
Yeah.
add a second target avatar. That would be my advice.
Hi, everybody. My name is Alex Brashears, and if you're watching this, you probably have some interest in Amy Silva's LinkedIn course, Raising Capital on LinkedIn. I am an alumni of that group. I'm a Bigger Pockets published author and a private lender, so my sphere is very much capital and real estate. I want to tell you this was a great course, worth every penny. The action steps items you're going to get alone are worth it, but much less the community that you're going to build, the networking opportunities that you're going to have. And it's going to save you so much time when you're trying to learn the tricks of the trade of raising capital on LinkedIn. Highly recommend it. Do not pass it up. Wonderful, wonderful tool to have in your tool belt for raising capital on LinkedIn.
Okay. Yeah. No, that's great. And serving where we're at currently, where we're trying to grow and we're building the credibility, building the track record, it makes sense to keep that momentum going and capital from those outside sources. But
Yeah, yeah. I don't think you're gonna be able to serve the younger professionals if your business isn't moving, already, right? So it's kind of like putting the mask on yourself on the airplane before the person next to you. So I don't think it's
yeah,
an or, but yeah, it may just be kind of a timing thing. I love
yeah,
it.
no, that's great. Okay. Okay. Perfect. Now, in terms of that transition, in terms of the transition from, or that second transition of, okay, now we're starting to raise some real dollars and
Mm.
we're starting to build some scale. At what point did capital raising stop being relationship based and more, or it's always relationship based, but I guess start loosely relationship based and start being more system based for you.
Oh, interesting. Let's see. Let me make sure I'm understanding the question. So, are you asking kind of at what point did the systems and processes help me scale? Or is that,
Yeah, now you started to raise some capital. Investors are coming to you
yeah.
now, okay.
Yeah, yeah. It was truly once I figured out how to get my voice out one to many. I was spinning my wheels with friends and family, had some success there, but it wasn't until and it took me several years, full candor, to figure out the LinkedIn algorithm, figure out what to post, how to get in front of people. But it was truly once I was able to figure out how to get my voice out there, what to say, how to draw people in, that, yeah, exactly. People were raising their hand and reaching out to me. I think especially in the real estate business, anytime you're trying to push stuff on people, like you'll get some people that say, "Oh, you should cold DM people on LinkedIn and pitch them your deal." What? This is not a $5 widget. That will never ever work. Maybe it did 10 years ago, possibly, but
Yeah.
yeah, the value always has to come first. You have to demonstrate how you're helpful, how you're helping with fears, with goals, with all those types of things on scale, at scale, before, yeah, people will raise their hand and where it really starts becoming a system. Does that answer your
Okay.
question or did I miss it?
Yeah, absolutely,
Okay.
absolutely. And when you had your phase 1, phase 2, as you're transitioning into the 2nd, 3rd, and even 4th
Yeah.
phase and beyond, at what point are you in those do you feel like you're in those phases? Because, that I guess that credibility gap, that at a certain point, the track record, people need to trust you and trust the track record. And then from there, that track record speaks for itself and
Yeah.
trust speaks for itself. So as you're transitioning through those phases, what, you know, I guess, does anything change? What are, don't, if it ain't broke, don't fix it. What's that line? Because now, at a certain point, you were raising capital for a large deal here recently.
Mhm.
And sorry if that's not,
Oh,
is
no.
that
Oh,
okay?
yeah.
Okay.
Oh, of course.
So
Yeah.
you were raising capital for a larger deal recently. And I'm not sure is that if that's your largest deal or if that's
Not
one
quite.
of your largest
Yeah.
deals. Yeah. You know, going from 100 doors where that might be 5, $10 million raise to now needing to raise 30 to 40 plus. I guess that transition, how do you equate that transition, I guess, if that makes any
Yeah.
sense?
Yeah. So we think of all this like a funnel, right? I'm sure you've heard the term a sales funnel or a marketing funnel.
Mm.
The top of the funnel, which is where you find leads, where you find investors, has never changed. The only thing I think I've gotten way better at is I was so excited in the beginning to talk about the deal and the IRR and oh my gosh, the diversification and all of that. I completely missed talking about the result of that or the what's in it for me. So once I figured out how to talk about how to solve someone's pain point, like I'm not spending enough time with my kids, or I'm completely invested in the stock market. I've always been interested in real estate, but I had no idea how to do it on my own because I'm in California. The rules are a nightmare, and I don't have time to travel to Kansas City or manage the property. Or I'm
Mhm.
55, I'm terrified of AI and age discrimination if I get laid off. I'd love to have another stream of income, but where do I even begin? My whole life has been structured around go to school, get a job, climb the corporate ladder. That's all I know. I'm not going to turn around and, start some side hustle business. So if you see what I'm saying, and I'm not saying you're necessarily like that, but just to answer your question, the top of the funnel never changed. It's all about, I think of a travel agency. Again, I'm a lot older than you, but travel agencies, before you could go online and book your own flight, didn't talk about the extra 2 inches of leg space. And aren't you excited to go experience that on the other airline? Or instead of peanuts, we've got pretzels. They talked about being on the beach and the
Mhm.
sun in their face and the pina
Mm.
colada that gave them that nice little buzz that carried them throughout the day. All of us have the instinct of talking about the little extra leg room and the extra, peanuts or whatever on the airline, AKA the IRR, all of that extra stuff, the city, why the city's so great. It's completely losing people at scale about the what's in it for them or the benefits. So that didn't change. What did change as I scaled is the middle part of the funnel. Obviously, I got more leads, I got more investors that were interested, but the nurturing part, I used to nurture people one-on-one, make phone calls, make texts. Hey, how you doing? This is what's going on. I figured out how to nurture at scale as well. And that doesn't mean I don't have one-on-one conversations. I have one-on-one conversations with all of my investors, but I
Yeah.
don't have conversations with them until they've gone through watching webinars, kind of self-selecting, getting some education. Once they do that, then I get on the phone with them. It's
Right.
not the other way around. And I see a lot of people spinning their wheels with tire kicker investors who haven't self-qualified, that haven't gone through that. So nurturing at scale has been really helpful. Email, podcasts, also social media serves as nurturing in addition to lead generation. Does that help?
That's great. No, absolutely. That's a great point, especially that last part where it's all of the work you're doing as you're building up sets up the investor long term and will help the investor long term. And that's what came to mind was I've heard from several people, oh, you're getting there. Oh, it's going to come. It's going to come. We had a webinar for our first deal where my dad showed up and I think one of my buddies showed up and that was it. And we were just pitching the deal and sharing, asking if anybody had any questions. And two people showed up and we're like, well, this is awkward because
Mm.
or the two people are here already know everything
Yeah.
about the deal. So,
Yeah. Yeah.
so from that point, people are saying, it'll come at a certain point. I'm like, well, where's it at?
Yeah.
So
For sure.
that's,
For
yeah,
sure.
that's
How are you doing lead generation? How are you finding friends and family? What does that look like for you all?
Yeah, friends and family, we've gotten through all of our friends and family, and then
Yeah.
also friends of friends.
Mm.
Big question that we like to ask when we first start is not, are you interested in investing? It's who do you know that's interested in investing?
Mhm.
Because one, that's opens the curiosity of, well, why didn't you ask me? Why don't you want me to invest in your deal? And two, that's gets them thinking about who could potentially invest. And it
Okay.
served us well to a certain degree, right?
Yeah.
There's a on that. And so now since we've gotten through that, we've transitioned into LinkedIn, into some social media avenues, reaching out to more people. That was a mystery to me for quite a while was how do I just reach out to somebody who I haven't spoken to? Well, I started to, as you were saying, post and share my thoughts and share my
Mm.
understanding of real estate and and then whether people would reach out to quite a few people have reached out to me and
Yes.
also reached out to people and just opened a conversation, not necessarily, hey, where, you want to invest in my deal. It's more
Right.
opening a conversation of, do you invest and how's that looked for you? And
Yeah.
if I could potentially help in any way, I'd happy to do so. So
Yeah. Amazing. Do you have a lead magnet for people on LinkedIn if they don't reach out to you, but for a way for them to learn more, dive deeper other than a website?
I do. And
Okay. Great.
I've been I had it online for a long time. I took it off because I've been updating it. And so
Okay.
it's definitely that I'll be doing there. I'll be finishing that here shortly or
Great.
updating it shortly. So, but we haven't gotten much traction on our website or our lead gen in the past.
Mm.
That could be another question. That is another question.
Yeah.
Generating I've had some people are like, "Oh," or have raised capital. They're like, "Oh, well, I've raised capital. People have reached out to me for my website. They saw my website." I'm like, "Huh, interesting." Because we've got a website, we've got our, it might not be fully polished, but
Yeah.
it could be optimized completely. So
Yeah.
I guess the question would be, how have you optimized your website and your lead generation, your lead magnets?
Yeah. I don't get anything from my website. My website's just a credibility piece. Yeah.
There you go.
It's worth investing in for sure because people look
Yeah.
at, don't
Oh yeah.
be, but there, to your point, there is the top of the funnel of how people raise their hand and decide that they want to invest or, maybe learn a little bit more. And then there's once they have that awareness and think, I think this is for me. Their second question is this complete BS? Because I've never heard about this from my financial planner. My friends down the street who are successful have never invested in this type of thing. So how do I make sure that this isn't totally, a scam? Your website helps to reaffirm, we're legit, we're not a scam. So it's not
Oh yeah.
bringing in leads, it's helping them along the kind of trust journey. Yeah. What is your lead magnet, by the way?
It is a well, I'm building a couple, but the one I've had out is an investor. guide that
Okay.
just kind of it talks about how we or how you can potentially screen properties, teaches you how to screen your sponsors, how to screen investors, and then how we select our team, things like that, just to teach people as well as, hey, this is what we're doing. If you like that, you know, that's how we operate. And so,
Great. I love that. I think that's very valuable, and people absolutely ask that question, right? Want to know exactly what I was saying. Of just like, is this legit? What are the red flags to look out for? I'm going to encourage you to take one step back from that, because in order for that to be valuable to people, they need to decide that real estate is for them first.
yeah,
And they may still, when they're looking at your LinkedIn or they're looking at your website, they may still be asking themselves, what's in it for me? So you might want to
mhm,
consider a lead magnet, whether it's I'd encourage a video. People love to see the two-dimensional you. We're one-dimensional on paper, which is fine, but
yeah,
there's a bit more of connection that people can see in a 2D. But maybe talking a bit more about how this space could benefit them. So, not saying that you should or have
yeah,
to, but just an idea
yeah,
to think about, because when folks learn the investor journey that I've experienced, and my students have confirmed this as well, is often people, as they try to learn, they they've got pain points and they've got goals. So they're trying to think, before I dive into selecting who to work with or what is
yes,
underwriting and all that, how do I even know if this is going to benefit me at all? So even if it's
yep,
a quick 10-minute webinar of, hey, this is what we do, but by the way, here's what other investors have said in terms of why they've invested and why it matters to their goals, their fears, their pain points, those types of things. It might get you some traction to lead people along their
yeah.
investor journey.
That's perfect. And we've noticed we also created one of our lead magnets is a investor calculator. So you plug in, to the very base level of you plug in $50,000
Yeah.
and based on, here are your returns, here's what each return means,
Yeah.
to that base level of I don't know anything about what an IRR is. I don't know anything about an equity multiple. What
Yeah.
does that even mean? So part of our lead magnets is the vocabulary, and
Mm.
is also we have an investor calculator that people find very helpful, that they're like, oh, cool, I can plug in 25,000, and here are the returns that you're projecting or that another sponsor's projecting. This is what I should get out, and this is what I should
Mm.
expect each year and at the end.
Yeah.
So that's helped get or people have a visual of what a 2x equity multiple is or a 8% cash on cash return is. And,
Yeah.
so that's very true. That's a good idea. And so even a webinar or even talking, me just in front of a screen talking or
Yeah,
yeah,
a few slides. You People will say that they're making decisions based on numbers and calculations, but behind all of those people, there are emotions, and we have to, as capital raisers, find ways to talk about those emotions. And that's where these goals come from, because not everyone's goal is the IRR or the return on capital. Some of it's safety, some of it's more freedom, some of it's more quality time. So what you mentioned about the calculator is fantastic for those people, but I think there needs to be something for a huge swath of people that aren't just, money does matter. It's not like they're going to give you the money and not care if they get a return, but there's a step behind it before the money part matters that
yeah,
I think could be really helpful to speak to. And you can speak to it on social media when you post as well.
yeah. No, that's a great idea. I will definitely be implementing that.
This
um,
has been so much fun. This has gone longer than I told you it would, but it's been such a great conversation. Just really grateful to have you on and add value to. I'm sure there are going to be folks who are going to want to reach out to you. What's the best way to get in touch and learn more about what you're up to?
Yeah, I'm on LinkedIn a lot. So my LinkedIn, it's just my first and last name, Hayden, or Haydenduer, and or my Instagram or website. So I'm active on social media. So
Perfect. We'll make sure to
yeah,
put those in the show notes so people can easily get a hold of you. Thank you again. Really appreciate you joining the podcast and cheering you on. And I'm sure all of our listeners are going to be excited to see your lead magnets and all the other things you do to move your business along.
and thank you, Amy. I mean, this has been incredible, and somebody at your, where you're at in your business, it's great to learn from, and so I really appreciate all your time and energy in this as well.
Oh, kind of you to say. It truly,
Yeah.
it is such a delight. Thanks everyone for joining us, and look forward to seeing you on the next episode. Hey, if your 2025 didn't go as you planned, the question isn't what goal should I set for 2026? It should be, what should I be doing before the real estate deals show up? I just closed a 4-property portfolio in Oklahoma, 498 units. My partners and I raised $12 million. 83% of the capital that I raised came from people that I did not know 3 years ago. I didn't know most of these people just 1 year ago. Your friends and family are completely tapped out and flying all over the country, going to conferences, trying to raise capital from other people who are trying to raise capital from you. Come on, we know it's no longer working. I created a 4-step system that works to help you increase your capital raising capacity in just 90 days, to dramatically increase the number of people who know who you are, to give them the opportunity to decide whether or not they like you without doing one-on-one calls. And when they book calls with you, they say, I feel like I already know you and I'm ready to wire money to your next deal. Learn more at capitalraisingsecrets.com. That's capitalraisingsecrets.com, and apply to see if you're a good fit for our 8-week on-demand course. Looking forward to seeing you there.